everybody. We are here yet again with your market update with Chris and Tim. And it's not just going to be about market updates.
Correct. It's not. But we are trying to be consistent with putting out content for you guys at least once a week. And this is our second episode.
Yeah, just trying to, bring things of value, some information, some topics. So today we thought we'd start talking, it's a pretty popular topic, to be honest with you.
It is.
So what I thought we'd do is we're going to drill you today. We're going to drill you with questions on VA loans.
Correct.
Right?
Yes.
Right?
Yeah. So just to get you guys to see, we decorated a little bit for our second episode, have the flags up. I am wearing a memorial shirt for one of my high school classmates, DeForest Talbert, who passed away in July of 2004 overseas. We're actually having a memorial for him in Alexandria, Virginia. So when I send out the email, you will see the details about his memorial when we send out the email tomorrow. But yeah, so just in a service mindset when talking about the VA home loan.
Nice.
and knowing what's going on this weekend. The VA topic was perfect.
Yeah, I'm an old school Army brat. Okay. That's what I am. Right. So I grew up in an Army family, but never went into the military personally. So I have a whole different level of respect for those that did. So it's kind of cool. But I think there's a lot of we said we call it like Mythbusters for VA loans, because there's a lot of misconceptions about VA loans, right?
Correct.
So what do you think the biggest myth about VA loans is that you still hear from real estate agents?
Just that it's harder for a seller to sell their house if they take an offer on a VA home loan based on the inspection process of a VA home loan and the 4% seller help. A lot of people have the misconception that 4% is the max that you can receive on a VA home loan and seller help.
Okay.
And that's inaccurate.
So you just throwing them all at us right now, right?
Yeah, those are the top two. Those are the top two.
Let's break it down. We'll talk about the inspection process. First of all, I have a problem with that. I always explain because people call it the VA inspection, right? And it's really just it's the appraisal.
It's the appraisal.
Right.
Right.
And so the conversation is, breaking that down for the average. Let's talk about the buyer first, right? Breaking it down for the buyer, it's like I still highly recommend you get a home inspection on your property, right? Because they're not inspecting.
Correct.
They're looking for specific criteria that the appraisal needs to meet, right?
Correct.
I honestly, over the years, there's been experiences where those VA appraisals have been more challenging. But as of late,
no,
they're it's an appraisal.
Yeah, no,
that's what it is.
No, and that's the great thing about being active in this market is you can actually see it. It's very rarely that I will receive a appraisal back with tons of conditions for the VA appraisal.
Right.
If anything, it's mostly just the water report and the termite report that people, I wouldn't even say have a problem with, but just have to check that box to make sure it's done.
So years ago, the seller was responsible for the termite inspection. Is that the case still?
That is still the case, yes.
Just making sure.
That is still the case.
See, that's why we're doing Mythbusters.
I
didn't remember if that was
Yes.
the case or not.
Yes.
And so the second thing that you said was the 4% seller help.
Yes.
So there was a misconception that the maximum contribution that a seller could give to a buyer that was a VA loan was 4%.
Correct. Yes. So 4% is the amount of seller help, not including the traditional closing costs. So if we were to do a traditional fee sheet, it would average about 3.5%, 4% for a traditional purchase, say at $400,000. As long as those costs are covering traditional fees, that does not count against the 4%.
Okay.
So we're talking title fees, we're talking underwriting and processing fees, we're talking escrow. None of that is counted towards your 4%.
So I mean, really, it's a pretty big number that could be.
It's a ridiculous number.
Yeah,
exactly. You can go 8%, 9%.
This is why this is we want to have this conversation because I don't know this, right?
Okay.
So years ago, you could actually, there was some debt conversations. You could actually pay off some sellers, pay off some. Is that still the case?
Yes, Chris. Yes. That's why the VA loan is in my eyes, the best loan, because the flexibility it gives you to communicate with someone that is a military member and say, well, how much credit card do you have? Okay, great. We can have the seller pay that off.
Nice.
Okay, well, you have a rental lease agreement. We need to break that, or we can have the seller pay that. Oh, you have a VA funding fee. We can have the seller pay that. So the seller can literally pay credit card debt, auto loans, break your rental lease agreement. The seller can do all of that with the VA home loan. So it's really about your buyer, or if you're trying to understand a buyer's need,
Yeah.
a lot of those needs can be met. If it's cash, debt that needs to be paid off to free up cash flow, that can be done. So all those things are just kind of at your fingertips, where the VA buyer can express to you what he or she needs. And then it's just you as the buyer's agent be able to negotiate that for him or her, where he wins, because who wouldn't want their debt paid off when they purchase a house?
Right.
Yeah.
You know, it's funny when the market shifts. That's when those kind of questions come up, now, right? You know, and the buyer has a little more
Wiggle room.
a little more wiggle room, or negotiating ability, depending on what the market's doing at that time. So that's very cool. All right, I got another one for you.
Okay.
So everyone's talking about assumable loans and
Yes.
assumable VA loans. Why is that such a big deal? See, I got my list of questions here, Tim.
yeah.
Why is that such a big deal in today's market?
Yeah, I think it's great if someone has a 2% interest rate and you have the capital, meaning, so give an example, we have a $400,000 sales price, VA loans at $200,000, interest rate on that $200,000 is 2.75. If you have the capital to cover the $200,000 that the sales price got from the loan amount, and then you can do the assumable loan. There were a lot of investors giving second mortgages on top of that. So you wouldn't necessarily have to have the full out-of-pocket cost to cover the difference between the sales price and the loan amount. But that has since changed. Servicers will agree or not agree on whether or not they will allow you to have a second mortgage when they're doing the assumable process. But yes, the assumable process used to take about 60 to 90 days. They've shortened that to about
Okay, that's
45.
good. I did hear that.
Yes,
So
they've shortened that to about
I
45.
think I did one and it was about 90 days.
Yeah,
So,
yeah, and it was discouraging to a lot of people. It was like a short sale to a certain degree, but they've been doing that a lot faster. So you can, I think you can go to Google assumable VA loans. There's a website that promotes different properties that have them, and then of course you can just do your own search when you look on like Realtor.com to type in assumable and see what options are available out there for you.
We have a tool also. If you go through the RPR, it actually shows the types of loans, what the values, and what they have on them. So
That's great.
as a realtor, this is a Century 21,
Right.
Thinking
Thinking outside the box.
Yeah,
Yes.
you go right into RPR, and it'll tell you the types of loan. It kind of estimates what you think they should owe at that point as well. So
That's great.
It's a pretty good tool for that.
That's
too.
great.
So,
That's great. And I think also if there's, I think we had Remine in the past. Do you remember
right.
Remine? Yeah. So maybe if you're in have a buyer that maybe has a lot of cash and you're in an environment where you can find out who has that 2.75 interest rate, those door knocking and those mailers that say, hey, I may have a buyer for your house, is something that you can, find that information and then start marketing.
that's awesome. All right, next.
I'm listening.
I'm controlling the conversation.
Wrap it. Let's do it.
Can a veteran use their VA loan benefit more than once?
Yes, they can. A military member can have 2, 3, 4 outstanding VA home loans. As everyone knows, majority of military members move within a 2 to 3 year period. So the VA allows you to have more than one VA home loan. It's all based on what we call your max eligibility. So what that means is if you have a $500,000 VA home loan and maybe you're moving to a county whose county loan limit's smaller, they'll allow you to take out a loan, but the ability to go 100% financing is limited based on how much you have outstanding on your VA home loan.
So you can still do the VA loan.
Correct.
It's just what portion of it you use, and if you may have to pay down more.
Exactly.
Put more down payment down and things like that.
Yeah, I'll give you an example. So I had a young couple coming from Chesapeake Bay, Virginia. Actually, Tracy Summers was the one that helped them. And at the time, Calvert County's VA home loan limit was a lot higher than St. Mary's County. So they had to bring $30,000 down if they went St. Mary's, 0% down if they win
Yeah,
Calvert County.
don't get me started on the whole VA limit because that's my soapbox. You know.
Yeah, listen.
Yeah,
St. Mary's
I didn't like that.
Yeah, is the little brother of
Yeah,
mortgage balance,
that's
loan
right.
balances for some
Isn't
reason.
that the truth? So, and no, that's actually a really good point. Is because there is the ability to use them and use them multiple times.
Correct.
And I think that's important to know.
It is.
And you know, in my list of questions, one of them said, you know, and most people know this already, but let's just be, you know, we're kind of breaking it down for the basics, right? So, who qualifies for a VA loan?
Correct.
Right. So it's not just active duty; it's retired. And
Yes.
Right.
Yes. So it's not just active duty; it's survivorship. So if you happen to have a widow of someone that served in the military, then there's a possibility that they may be able to utilize the VA home loan. You have people that served in the National Guard that maybe necessarily didn't have active duty, but because they were in good standing, they're able to qualify for the VA home loan. So I always ask the clients that I'm communicating with if there was any type of military service or anyone, any type of
I mean, I
military
asked them
service.
too. You know,
Yes.
so one of the first things we ask.
Yeah, and then they can get what we call their certificate of eligibility,
Right.
so that they're able to verify that they actually have the service the benefit. And if for some reason they're short, the VA will then say, hey, listen, you have one more year before you're going to be able to be eligible for this.
Nice.
Based on, you know, you may be serving 5 years in the National Guard instead of 6.
All right, so this is not on my list. So
Okay.
I'm just thinking about. So let's talk about the VA appraisal process for a second again. So one of the things that we've talked about is when the appraisal comes in. VA has been instrumental in when the value of the property doesn't meet the appraisal.
Correct.
And VA really has created this. What's it called?
Tidewater.
Thank you. I couldn't think of it. The
Yeah.
Tidewater.
Yes.
Yeah, Tidewater Act.
Yes,
Right?
Tidewater
So let's
Act.
talk about that for a second.
Yes.
Share your experience with that and what it does and what it is.
Okay. Yeah. So if there is a undervalue coming in on appraisal, the appraiser will then issue what we call a Tidewater. And what that means is the listing agent, the buyer's agent, anyone involved has the ability to give additional comparables to support the value before the appraiser actually releases the appraisal report in the VA portal. As soon as he does that, then the ability to refute the appraisal just becomes more of a tedious process. Right. But it is a nice alert for you to be able to kind of get your ducks lined in a row to make sure that you have supporting comps to support it. And I'm going to be honest with you, for every 10 Tidewaters, I've maybe seen one overturned. So it is something that you don't necessarily see a lot, but at least you have that alert to be able to know, hey, this may be coming in low.
No, I've gone over. I've had a couple
turned over.
Yeah, turned over.
Well, then we need
it's not uncommon to if you have all your right information and you're providing it, and also the ability to communicate well with the appraiser, depending on who it is. It's a huge issue. It's right
95%
there,
of it.
Yeah. So that's why it's always having that relationship as a realtor and building a relationship with the appraiser so that they know, hey. You can call me if there's questions. I'm going to meet them there. I meet the appraiser at the house for all my listings.
Yeah, you should.
Just to have the conversation. Look, here are the comps that I use. If you need them, I'm giving them to you so you can see what I got.
You point out the upgrades, all of it, all
exactly.
of it. We had an appraiser come in earlier this year, and he literally said he loves it when people meet him at the house.
Yeah, that's right. That's right. We had one that came in that said that.
Yeah.
All right, so I'm trying to get through and keep us timely here. So. I'm going to ask you, this is maybe a curveball to some degree. Are there any advantages that isn't common knowledge in VA that you're aware of, or something new? Is there anything new out there in VA world?
Yeah, the debt to income ratio. So for a lot of
I pulled that one out.
Yeah,
The
debt to income ratio. A lot of people don't know this, but I've qualified VA buyers for 70% debt to income ratio.
Wait a minute. 70.
70.
Okay.
70% debt to income ratio.
And the normal is?
Normal is 50.
I was gonna say.
Yeah, 50% conventional, maybe 55% FHA, but 70% debt to income ratio is something that the VA will approve.
Interesting.
And it's just really about the, I guess you could say, solid foundation of income for military members.
Wow.
Where and they really want a lot of their military members to have housing. For example, the VA, a condo, right? And sometimes a condo may not be VA approved, meaning the whole building.
Right.
But if you do something called a spot approval, you can literally ask the VA, hey, we want to make sure this veteran or active military has housing. They will give that loan based on that one single condo approval. Yes.
Which actually probably changes the whole setup for the whole rest of the condo later.
Well, yeah. Well, I think the idea is that any HOA would want their whole building to be approved, but it just goes to show how strong a VA buyer is, so that when that listing agent is saying, well, I don't think it'll qualify VA, you can say no. We'll get a VA spot approval. Spot approval. And the VA will go ahead and clear that because they want military members to have housing.
That was a great tip.
Yes.
That one's a good one. I like that. So.
Yeah.
Well, look, before we go, because you're trying to keep this.
Yes, keep it 10 minutes. Yeah.
Any other VA tidbits that you can throw out there today? Or so?
Yeah, so the debt to income ratio also, debt to income ratio at 70%, very flexible. I will say also credit scores are also very flexible. You know, the misconception is like 620 and below. We've definitely qualified VA buyers for 580. Another one is military members being on home loans together. Now, in today's environment, with it being the highest point for people to purchase, was on affordability, right? Getting two military members that aren't married on the same VA loan to keep their 100% financing is something that I'm going to start promoting more, because you can go and buy a house if have you and your buddy at the same age of 24, 25.
So do they split their eligibility?
One person holds the eligibility, but the 100% financing still applies because of the fact there's two military members that have the VA eligibility. So if you were to do that with a military member and a civilian, you'd still have to put money down based on the way the loan's structured. So if you happen to have a group of young men looking for housing, which happens, right? But it's also just educating them, because a lot of people don't know that you can go ahead and get another military member that's not married to you, that's not family, to be on the loan with you. And now you guys have already started your home ownership and investing with utilizing the VA home loan.
Awesome.
Yeah.
So look, I think this conversation is worth repeating another day.
Definitely.
Going into it a little bit more. Maybe what we do is we break down some of the conversation of each one of those categories a little differently. Maybe in our appraisal conversations or something.
Yeah, and then also 1 to 4 units VA home loans. There's so much we can talk about with the VA home loan, but I do think we covered a lot to let people. Let people understand that if you have a VA a VA buyer, there's a lot to work with. So just try a lot to work with.
So the most important thing is get them in touch with Tim.
Correct.
So when you see Tim's video, let him know that you're actually looking at it. And I think we're gonna please like it and share it if you want. Within our little network.
With our network, guys. We're really trying to just give gems and diamonds to Century 21, New Millennium agents, so that they have this information to go out into the marketplace. I will also say this. I'm gonna end on this note. This is one of the biggest gems that I received this week.
Okay.
One of my coaches, when we go over mortgage annual reviews, I asked him, I said, well, what does it look like for a real estate agent to go over an annual review? And he said what he does is he advises his agents to communicate with his buyers on their inspection report, and he does an annual inspection report update. So what he'll do is he'll take a look at the inspection, circle back with that client and say, hey, I just wanted to follow up with you.
Nice.
I'm doing an annual review for my buyers, and just checking in to see how did you or have you accomplished all of the checklists that were on the inspection. And now that gives you some conversation to have with your clients going into the fall season.
And that gives us communication with our clients, which we need.
Exactly.
And right now we all need to be communicating with our clients as much as possible.
You're coming from such a place of service,
for sure,
because you have a full detailed report that I don't know where my inspection for my house went, right? And I'm sure, like any other person, life happens, and you probably forgot about it.
No, that's a great point. So, all right, well, look, guys, thank you very much. Thanks for checking us out, and hopefully we'll bring some value to you in the next weeks to come.
Yes. Thanks for watching, guys. Like and subscribe.
See ya.